there wasn't a whole lot of coverage about the markets continuing to fall. So I thought, let's bring an expert on to talk to him about it. He's Doug Flynn, co-founder and partner at Flynn Zito Capital Management. He's an expert on the economy, finance, among other things. You can follow him on X at Flynn Zito and follow him on Instagram at Doug CFP. Doug, always appreciate the time. Thanks for joining us.
Manny, great to be with you again.
I imagine what we saw yesterday, especially at the end, was all due to Fed Chairman Jerome Powell worried that tariffs would undo some of what they've been trying to do over the last few months to fight inflation.
Yes, it is going to make his job a little bit more difficult. And so what I've noticed is probably 90% of the time when the Fed chairman speaks, the market tends to go down anyway. So it isn't really that out of the ordinary when he begins to speak, because he speaks in platitudes and you have to kind of interpret, what he's saying. But he is saying that in the short run, inflation could tick up, and that could create a little bit of a challenge in the near term. And that's the key, though, in the near term. If we get through that and then you bring in tax cuts and some other things later on, then perhaps that wanes and they can get back to their normal course of business. But this is disrupting it in the short run.
Sure. Maybe the markets go down every time he speaks because he hasn't had a lot of good news for a long time.
Could be. Could very well be.
And I saw you talking about this yesterday. You said that maybe this might be, maybe I misunderstood you. I'm a putz when it comes to all this stuff. But it seemed like if we get through these first few months of the tariffs and trade wars, depending on how they work out, maybe the markets will settle down and we won't continue to see these drops. Is that basically what you were saying?
Yeah, it comes from the standpoint of business, and the market likes certainty. They want to know what the rules are. Hey, whatever the rules are, they are, but what are they, so we know how to plan? How does a business owner decide whether they're going to invest in a factory in the U.S. or elsewhere? How are they going to hire? How many are they going to hire? When are they going to hire? So you put off these decisions. So in a lot of uncertainty, decisions do get pushed off, and that can create a little bit of negativity, not only in sentiment, but also in the companies and in the markets and in their earnings. And so that can kind of drive things down. Once you have the clarity, then you're like, all right, here's what I'm going to do. I can get behind that. I might have to shift some purchasing from here to here.
Sure. Whatever
it is, we can do. But then you can kind of move forward and get back to the business of America, which is business. And at the end of the day, the market isn't some crazy place. It's a bunch of companies that we buy their products typically, and the more of that they sell, the higher their earnings are, and that over the short term, doesn't necessarily translate into the stock price, but over the long haul, it definitely does. The more stuff they sell over a longer period of time, the higher the stock price will go, assuming it's a well-run company and a good citizen. Those kinds of things tend to dictate how it goes over time.
So clearly, the one constant everybody we speak to says the markets don't like uncertainty. The president overnight on Truth Social threatening to fire Fed Chairman Jerome Powell. I imagine that creates additional uncertainty, maybe part of what we're seeing in on the Dow this morning.
Yes, the Fed is independent. It's arguable whether he has the actual power to fire him. I don't know that he does, but his term is going to end, and he will be replaced, and that's more likely how it's going to go. Where this comes from is that in order for Trump to get everything that he wants, he needs lower interest rates, and he's not getting that right now. And where that comes from is like, the yields sort of on the 10-year is a great thing to look at. If you even if you don't follow, you just take a look at what the 10-year Treasury yield is currently yielding. It was down below 4%. It bumped up to 4.5%. It's now around 4.25%. But that translates into basically mortgage rate. And when you have mortgage rates bumping up against 7%, they're in the high sixes right now, and you have all-time high prices in a lot of places for real estate, that doesn't move. The affordability is too low. People can't buy homes. Also, the interest rates you're paying on your credit cards and your other loans are too high. So he wants lower interest rates for a whole host of reasons, including which we have a lot of debt as a country, as you know, and a lot of that debt keeps renewing. And when it renews, it's based on current rates. The higher that is, the more it costs us as a country to run all this. And so you need lower rates to have a lower cost of carrying that debt. until maybe one day we can start to pay that debt down. I don't know if that will ever happen, but we can at least stop it from getting larger and larger and larger with every president we have.
One of the things President Trump was saying that the European Central Bank, I think, have had 7 straight interest rate cuts, right? I get completely two different economies, obviously.
Yes.
But why so many rate cuts over there when here the Fed has been holding steady, I think, since last summer?
Yes, great question, and it is exactly what you said. It's two totally different economies. Germany is the biggest economy in the EU. Mm-hmm. If you look at Germany, they've actually been in a recession the last 2 years. In the last 5 years as a country, they've had zero growth. If you look at when the EU started, their GDP was essentially the same GDP as the U.S., and they were put together to say, hey, we can compete with the U.S. and we compete with China. Well, you fast forward to today, and our economy is literally twice the size of
right,
Europe.
Right.
So they've gone really nowhere. We've done really well. And so part of that is interest rates are higher here because we've got a much better economy. Now, you can argue that it's not a great economy, but, that's always I have the best house on the worst block scenario. The world isn't really growing at gangbusters, but we're still growing decently. Even if that growth slows, that's normally the case, what you need. When growth slows down and unemployment picks up, then you have lowering interest rates. Trump's trying to push the lower interest rates now to get more of what he wants, but that's why the Fed's saying we don't have the same case for lowering like Europe does. They need to lower rates to get their economy going. We don't necessarily need to do that now. However, if we do have a little bit of weakening and a little bit of, which we likely will because of the tariffs and other things, and if we have a little bit of a tick up in unemployment because of all the layoffs and whatnot, then he'll probably get his wish, but maybe not for the reasons he wants.
Not for the right reasons. Yeah, I appreciate that. Doug Flynn, co-founder, partner at Flynn Zito Capital Management. You can follow them on X at Flynn Zito and follow him on Instagram at Doug CFP. Doug, always appreciate your time, my friend. Be well.
Thanks, Manny. You too. Appreciate it.